Apple is in the spotlight this morning. The technology giant expected to unveil its new streaming service today, potentially a major competitor for Netflix and cable providers. Apple says that the new service will feature original programming, include options for add-on subscriptions. The company expected to charge a fee. No details yet on how much that will cost. Joining us right now is LJH Investment Advisors, social media analyst Larry Haverty. Larry, good to see you.
Hi, Maria.
Obviously, the big news this morning is the Mueller probe. Does that impact investing or the markets in any way, in your view?
Well, I started in the business. The day I got out of the Navy was the day of the Watergate break-in, and I lived through 72, 74, and it was a terrible period for investors. At the bottom of the market, the day the market bottomed, I was visiting a company, and the company had more cash than the market value of the stock. That's how bad things were.
This is the biggest, this is the biggest scandal of our time.
We've dodged the bullet. We've dodged the bullet, and I think that's a great relief. And now we can just concentrate on business and earnings and cash flow and multiples. And I think that's going to make life easier.
Apple is in the news this morning. It's the most valuable company once again. Microsoft is now number 2. Apple closed last week with a market value of $916 billion. What do you think right now of some of these growth stocks that you've been invested in for so long?
Well, I think if you look at Apple, and that's the center of the fairway right now, in the last month, Maria, the stock, even after Friday, went up $80 billion. So what have they told people? They're going to spend $1 billion on content. Now, if you spend $1 billion on content, if you're really good, and we don't know that Apple's really good because they're new at the game. The odds are in Hollywood they're not. Maybe you're going to make 20%. So that'd be a $200 million of cash flow. And the market has already paid $80 billion for that, if you assume that the movement in the stock in the last month is anticipation of what's going to come out at Cupertino this afternoon. Now, it started, I think Apple was a drastically undervalued stock. I'd say now it's fairly valued to maybe a little bit overvalued. And the real problem here, Maria, is what you said when you started. It's a $900 billion company. If you're going to grow the company double in 5 years, a 15% rate of growth, that's adding another $900 billion in value. The numbers, after a while, get pretty preposterous, and sooner or later the market's going to worry about that.
TV service and then news, and it's not just going to be the original programming that Apple so far has spent $1 billion on. It's also an app that lets you essentially watch TV and instantly subscribe to pay TV channels like a Starz or an HBO. But you've got 1.4 billion devices globally, iPhones, iPads, and Macs. What does this do to all these other content providers? Because Netflix is an island that, in the eyes of investors, can do no wrong. But you've got a player like Apple moving in. I'm a subscriber to YouTube TV, which is awesome. What does that do, ultimately, to, say, a DirecTV? So with Apple getting into this, I wonder if people start going over their valuations on these other companies.
Well, you know, I think I listened to Nintendo many years ago talk about this. And the thing that is in tight supply and you cannot increase in any way, shape, or form is time. And the consumer only has so much time to look at stuff, to be on devices. And the more people that get into the party, eventually the party's going to get crowded. And right now, Metacritic rates 80 serialized content shows. And some of these aren't really very good, but there are 80 of them. So there's an unlimited supply of content already. Apple's going to produce more content. Generally speaking, when you are in an industry as an investor and supply is increasing, you have to run for the hills. I watched the financing cycle in junk bonds in the 85, 87 period. At one point, they raised $8 billion for an industry you never heard of called the disk drive industry. And not one dime of that money went into increasing the demand for disk drives. It all went into increasing the supply of disk drives. And what Apple's doing right now is they're spending $1 billion on increasing the supply of entertainment. Netflix is spending $12 billion increasing the supply of entertainment. There's only so much entertainment that people can watch because time is limited, and you have a life besides watching content.
Larry,
so it's going to end badly for someone.
Real quick, these companies are at record highs in terms of market value. Apple now the most valuable. Would you buy this stock at this level today?
I would buy Apple because the multiple is for Apple is about a third of what it is for Amazon and a tenth of what it is for Netflix, looking at trailing cash flow. So Apple's still undervalued, but I think for the first time there's a little bit of risk because the stock moved $80 billion in the last month, and I don't think there's any way in the world that what's going to come out in Cupertino is going to really move the needle from cash flow for at least the next 3 years.
We'll leave it there. Larry, it's good to see you.
Thanks a lot, Maria.
Thanks so much. Larry Haverty joining us.